Hello guys, it's another red week on the market. It's another red week and it's been red since Wednesday, man. It's been red since Wednesday, since Tuesday, man. You know. So and we've got FOMC today and unemployment rates and non-farm payrolls. Every non-farm payrolls is an economic data that usually um, it's a high impact news that got released at the first Friday of every month. Okay, so that is non-farm payrolls. Okay, so this is unemployment claims, this is unemployment rate. So each time you see red indicators, high impact, they usually move the market, you understand? But when you see oranges here, it's a low impact. Okay, so today that's Wednesday, we've got Bank of Japan, releasing their monetary policy and stuff like that. You can read them here. And then Usdcad, and at 7 p.m. we'll be having FOMC statement. So all these financial data usually move the forex market. Okay, they usually move the forex market. So on Thursday we've got monetary policy from GBP, yeah, and then before the non-farm payrolls. So let's get into what I traded today. So on Monday I took a trade on Usdcad, that USD Canadian dollars, and since Monday it has been consolidating. You can see there are no news here on Monday. So each time, or most times when there are no news on Monday, the market usually ranges. I mean ranges whereby the market goes in consolidation, that is up down up down up down up down type of movement when there are no economic news. Okay, so but when there are economic news like here, it's the market moves quite well because it is volatility, and these are the reports. You don't need this. What you just need is this, the indicators, to know when you're leaving the market. Like usually, because I'm trading on a higher time frame, like I'm trading on a 30 minutes time frame, and I check my hourly chart, you understand? So I can be on the market even when news comes, but I don't trade news. But because the institutions use news to drive the market to the direction they want. Okay, the institutions use news to drive the market to the direction they want. So I usually, when I was trading on the 5 minutes time frame or 3 minutes time frame, I usually don't trade the news. I leave the market at 30 minutes before the economic data is released. So yeah, so this is why I traded. Okay, this is silver, and I took this trade. This was the trade I took on Monday. I took this trade on Monday, and it has been, I took this trade on Monday here. My position was around here. I opened this trade at this price. This was where I bought. So I bought this trade here, and I sold Canadian dollars, and it has been ranging up and down, up and down. So this is what is called consolidation. Okay, consolidation is just when the market is ranging, indecision. You can call it indecision. Okay, so it is indecision when the market is going up down movement. Okay, so I traded it here. It went down, started coming up back to my stop loss. It started coming back to my stop loss, and I added another position here. I used this line to represent where I added another position. So I added another position here. So that was where I added the position. Here, this was my first trade. It came down, went up again. I entered another position here. I entered another position here so that I could average down on what I've traded here, because I was just like, if it's coming to take me, then it should keep coming to take me. But here, and because the market has broken structure to the downside, I will still talk about market structure. So that was the reason why when it went up, I traded. And if the market is going in an upward direction and starts breaking structure to the downside, that means the market is getting weak. So that was one of the things that gave me conviction to take a sell. Okay, the market, you can see the market has been going up. The market has been going up. I took this buy. The market has been going up, and then it starts breaking structure to the downside. It starts breaking structure to the downside. So that was why I took this sell. Okay, and we are in a supply zone. Okay, yeah, so this is the reason why I took this sell, and I'm targeting here. Yeah, so I would release the progress of this trade to know if it's going to hit my take profit. Okay, like I said, let your winners run. So I have just 2 positions on this trade. Okay, and I'm glad the 200 moving average, the price is below the 200 moving average, so it's also giving me a confirmation or a boost in my confidence that perhaps the market should go down more to my take profit. So I will be giving a regular update on what happens. And I took another trade on Nasdaq. I took another trade on Nasdaq late night yesterday. I took this buy here. Okay, this was in there. I wanted to buy Nasdaq, so, and I took the break of this candle. This was, I'm sorry I altered it, but let me go back. Yeah, so this was where I had my stop loss. I entered this trade here. I entered this trade here. This was where I entered, and the market went in my favor with this candle, and then came straight down to take me out. So I was liquidity. Here, and when the market took me out, boom, this was my analysis, and when they took me out, they just left. Okay, so it is what happens. You've just got to hold your. I didn't take another trade because I was already on I already had 2 open positions on Usdcad, so that was the reason why I didn't take this buy again. But when they took me out, I should have entered this trade because I knew it was going to go up. Okay, I knew it was going to go up, and I lost it, and that is just about it. So this was the sell I took here last on 22nd July. Okay, so I will explain everything that happens on my chart. I am trading on a 30-minute chart. All right, so I will be giving an update on the USDcad on the progress of the trade. Okay, all right. I would like you to subscribe to my YouTube. I will always update constant updates on my trades and psychologies and classes. Okay, so see you on the next video.